Yep.
If you're not seeing my screen, please let me know in the chat. All right. So let's get started. Sorry, give me 1 second here. I'm trying to get used to. Sorry. Give me 1 second here. So, thank you for your patience. This technology is, it's great and it can be tricky at the same time. All right, so this is going to be the advanced refresher. Anything that Eddie covered on Tuesday, I'm not going to cover like standard deductions or filing status. I'm not going to cover any of that. So we're just going to cover really the topics that are really on the advanced section. And there are a couple new things this year with advanced, but I am not going to go into them into much detail today. I'm going to save them for the tax law update course, which I think is on the 12th. I'm going to cover them more in detail in that section as opposed to here, just because it's all part of the new tax law. All right, so let's get started here. All right, this is just some basic reminders. You know, don't accept money, although now we really can't do it because we're online. Don't solicit any business. Don't prepare false returns. You know, and treat everybody with respect. So it's just your standard things. And don't forget, everybody has to take standard of conduct, pass the test, take interview, and then if you want to be a preparer, you have to have at least basic certification. And you know, depending on what your certification is, only do what's within your scope. And you know, if anything is outside of that, talk to your site coordinator, which would be Eddie or Ms. Johnson. All right, so let's go into income. So a big section of what we do on the advanced section is related to self-employment income. And there is a change this year where the 1099 miscellaneous has kind of been reformatted. And so what we used to see on the 1099 miscellaneous as box 7 for non-employee compensation is no longer there. Now we have this new form called a 1099 NEC for non-employee compensation, and I don't think I put it here. I did. Oh, I have one further down, I think. But this is how it looks. It's just a little tiny piece of paper that literally just has a box one that says non-employee compensation. And it's literally all just for that. Let me go back. Oops, too much. The reason why they did that is because some of the items on the 1099 miscellaneous can be reported later on to the IRS and to Social Security, but the compensation piece of it has to be reported, I think, by January, and so this was creating a lot of issue for reporting purposes, and so the IRS decided to split this out. So now we have this new form, this 1099 NEC, and the 1099 miscellaneous will just have other sections, whatever existed before. So we won't see it as much. But in regards to self-employment income, it can also come from W-2s if they're marked with the statutory employee box. It can also come from a 1089K for if you get paid electronically. So this happens a lot with You know, if you drive for Uber or Lyft, you'll get this 1099-K because all your payments are electronic, and if it hits a certain threshold, they have to give you this form. It can be from the person's books or records, if they use like QuickBooks and they input everything there. Or, you know, don't forget that even if nothing is reported on a form in terms of income, but the person got paid in cash, they still have to report it to the IRS as income, even if it's not written on a form. This is just a note from last year. We used to have Schedule C and CEZ. The CEZ has been made obsolete since last year, so now everything is just on a Schedule C. There's no more short version of it. In terms of expenses, you know, a taxpayer can deduct everything that is related to self-employment, you know, your supplies, your commissions and fees, office expenses. Oh, I have supplies twice. Oh gosh, I need to update that. Your taxes and your licenses, costs, you know, and any business mileage. And for business mileage, you know, you have to keep accurate records because the IRS will ask for that. And we usually advise people to take the mileage instead of actual costs, because the actual costs are much harder to prove out, and the IRS will look more closely to it as opposed to business mileage. Let's see. Oh, which I'm talking about next. I don't know if I mentioned here. No. One thing I want to mention, especially because it will be relevant for this year, will be the home office expense deductions. I feel like that will be a topic that everybody will kind of hit on this year, because if you're self-employed and if you work on a dedicated space, then you can always do it. Just a reminder that within the VITA scope, we only do the square footage. We only do the simplified method, which you just take the square footage of the space, but it has to be dedicated exclusively to that activity. And it takes the square footage of the space times some, I think it's like $5 or something like that. It's not within the VITA scope to do actual expenses, like if you want to do a prorated amount based on mortgage, property tax, all that, or utilities, like I think that's outside of the VITA scope. This will also be if you are, I mean, outside of the Schedule C, outside of self-employment, if you are a regular W-2 employee and now you're working from home and you want to deduct cost of your home office, none of it is deductible. When they passed the Tax Cuts and Jobs Act in 2017, all of those expenses were going into your what was it called? Your non-reimbursed expenses on your Schedule A. All of that went away. So if anybody comes in, this is just a general piece of advice. If anybody comes in and says, "Oh, well, I'm working from home. Can I deduct these costs like internet, utilities, like all of this other stuff on my return?" The answer is no, you can't. If you're a regular W-2 employee. So that's just a piece of advice, because I think that will come a lot into play this year. All right, going back into this topic. So for business mileage, kind of how I already touched upon it, you can deduct business mileage on a Schedule C, and there's two methods you can use. You can use actual expenses, so you would take all the costs for gas, insurance, maintenance, and prorate it by the actual use of the car. But you need to have very accurate and detailed records in order to claim these expenses. What we usually advise people to do is just do the standard mileage, you know, take whatever mileage you actually engage that what you can consider business, so no commuting, and multiply it by the 57.5 cents per mile that they have for 2020 and be done with it. It's easier, you know, it's easier to prove than actual expenses. Because, you know, people might guess, oh, I put $50 a gas a week. Well, that's great. Do you have receipts? No, then that's a problem. So that's a good question. So I just got, so is an actual expense out of the scope for Rebate? Actually, no, it's not. It's actually within scope. We just, as a, in general, we advise people not to do actual expenses, but it is within the Rebate scope. The only one we can't do actual expenses is for home office. That we cannot do actual expenses. Whoops. So for Schedule C, there's a couple situations where it's completely out of scope. So people have to use the cash method of accounting. So, which is generally most of the people we see. If they use any, you know, they want to deduct prepays and stuff like that, we don't do it. There has been a change in the amount of expenses. Now it's within our scope to do expenses up to $35,000. Oh, I said over. It's not over. It's up to. I need to change that. Any expenses up to $35,000 we can do. It's within scope. Last year was $25,000, so they've increased it by $10,000. We cannot do anything that has cost of goods sold. So anybody that deals with inventory, we can't do. Anybody that has expenses for, you know, for employees, we can't deal with that. Here it says business use of home, but we can do that. We just cannot do the actual expenses. We have to do the simplified method that we can do. And we cannot do anything with depreciation or asset write-offs. We cannot do anything with that. All right. So I have a polling question, and I think I'm going to launch a polling question, so you should see something pop up on your screen. And so the scenario is this. So Austin works as a customer service employee during the day, and he also has a separate business as a personal trainer. And well, during the pandemic, that's a little bit hard, but let's assume this is still accurate. But and that he travels to teach classes at a gym 5 days a week. So he has all these sources of income. So he has cash receipts of $4,000, a W-2 income of $25,900, income report on a 1099 NEC for $5,400, income report on a 1099K for $2,500, and a 1099 INT for $250. So what's the total amount of business income that Austin must report on his Schedule C? Again, just the business income, not total income, just business. And I'll give a minute, 1 to 2 minutes for everybody to get their answers in. Oh, I just realized there's a problem with the answer. The last one you see that says cash receipts plus 1099K, assume that there's another plus missing for the 1099 NEC. Sorry about that. All right, I'll give 20 more seconds if anybody else wants to put their answers in. All right, let me end the polling question. All right, so the correct answer was intended to be the last one, but let's go through it. So for it to be reported on the Schedule C as business income, so you would consider the cash receipts of $4,000. That would go there. Then you would not include the W-2 because that would just go as regular employees' income. So you would not put that on a Schedule C. You would include the 1099 NEC for $5,400 because that's non-employee compensation. So you would be considered self-employed with that amount of income. And you would also include your Form 1099K for $2,500. So all in all, you would have, I'm terrible at doing math in my head in the morning. So the total business income would be $11,900. You would not put the 1099 INT because that's for interest income. So that would not go on the Schedule C. All right. All right, another polling question. And I'll launch in a little bit. If you guys are not seeing the polling questions, sometimes it has to do with pop-up blockers. But if you can't answer on the poll, just send it in the chat, just to participate. So same scenario, but now it has to do with expenses. So there's all these expenses for advertising, supplies, nutrition supplements, liability insurance, all of these. So what would be the total amount of business expenses that he can deduct on a Schedule C? And let me try to launch the poll here. And launch poll.
So we just, click the boxes. I didn't realize that's what I have to do. Thank you.
All right, I'll give another 30 seconds or so for the last few people to get their answers in. All right. Polling and all right. So the correct answer was the first one, and I'll go through it and explain. But pretty much everybody got it right. So you would include the advertising. That's a legitimate business expense. You would include the supplies because you would assume everything's for the business. You would not include the nutritional supplements for his own consumption because of that keyword. It's for his own consumption, so it's not a business expense. So you would not deduct that. You would deduct the business liability insurance. It's for the business. You would deduct the business license, because again, for the business. You would not deduct the donations on the Schedule C. That would go into his itemized deduction section, or according to the new tax law that came out this year, if it's up to $300, you can do it as a deduction on your regular 1040 if it's a cash donation, but we'll discuss that later on. That's just a caveat for this year. And you would also not deduct the eye exam and contact lenses on the Schedule C. That again would go as a medical expense onto his Schedule A as an itemized deduction. All right. Is there, I think, one more? Okay, there is one more polling question for this. And again, same scenario, and this one is just to determine how much business mileage can he deduct. And let me launch the polling question. I think this is the last one of these scenarios. Another minute for people to get their answers in. All right, I'm going to stop the polling. All right, the right answer was this middle one. You can, the total business mileage would be $28.50 for the year. Because that's where he went from his main job to the gym where he taught classes and to meet with individual clients. So that would be considered business mileage. You could not deduct the $37.50 from his home to his main job because that would be commuting mileage. So you could not do that. And you could also not deduct the 1,300 miles from the gym to his home because, again, that would be commuting mileage. So you could not deduct that. So the right answer was the 2,850 miles. All right. All right. So the next topic I have here is just related to self-employment tax. Essentially because self-employed people are, you know, as opposed to being a W-2 employee, they do not get Social Security and Medicare withheld from their paychecks and remitted by their employers. They have to cover their portion and what would be their employer's portion when they file their tax return. That's pretty much the gist of it. I just want to make a note that for this year, the self-employment schedule, and for the most part, the software does this automatically, so you really never have to go to it. But they used to have a short version and a long version, and apparently for this year, they went away with the short version. So now there's just one Schedule SE that is basically just a long version. So that's just a new thing for this year. We also generally advise if people think they're going to owe more than $1,000 because they're self-employed next year, we usually tell them to make estimated tax payments over the year because, one, they avoid an underpayment tax penalty, which, you know, if you already owe money, it sucks because it's more money you have to pay. They really didn't have to pay. But it also cuts down a little bit on the surprise, like, oh, you know, when you tell people, oh, you owe $5,000 or $10,000, you know, that's never pleasant. And people get caught by surprise. So we usually tell them, you know, get ahead of the curve and, you know, just try to make estimated tax payments as much as you can, just so you avoid a little bit of all these penalties and, you know, potentially interest. All right. Now going to the next section, still in the Schedule C realm, but related to ride sharing. And you can consider ride sharing, or, you know, if people deliver for like Grubhub or deliver for Uber Eats or anything like that. So we created this section a couple of years ago because of the surge and all that, and it's still relevant. I think now probably you'll see more in the terms of delivering food, like through Uber Eats or Grubhub or stuff like that, or oh my God, I forgot what the other one is, but you'll probably still see that, but it still lands up in the same place where all of the people that drive for Uber, Lyft, or any of those companies, they're all considered contractors. They're not employees, so they should receive a 1099 NEC this year and a 1099-K. For the most part, Uber and Lyft, they provide a year-end tax statement that basically consolidates all of these 1099s into one file and provides additional information. And that's usually what we go by, because they won't send the physical 1099 to them. But these statements are also good because they tell them how much business mileage they counted and what fees did they charge them that they can potentially deduct. Although there's always the chance that there might be additional mileage than what is captured on the statement, but the person should have some record of it. So we would have to ask. This is a Lyft year-end tax statement. This is from last year. They, for some reason, say a 1099-M. No such thing exists. This is a 1099 miscellaneous, but it's going to change this year. But this is the only one I found to kind of do this example. But the Uber one is also kind of similar to this. But it will tell people, okay, here's how many miles you drove this year that we accounted for. And I have a little explanation here on this little text box. But basically, this is the mileage you could consider business mileage and deduct on the Schedule C. Then they'll say, how much were your ride payments? So this is how much people got paid. This should tie to a 1099-K that people would receive. So you would record all of this amount as earnings. Then they have this non-ride earnings. This is usually what they would report is up until last year on a 1099 miscellaneous, starting this year on a 1099 NEC, and this would also be reported as earnings on the Schedule C. This non-ride earnings sometimes are like bonuses if you recruited somebody or if they gave you some incentive. So that's what they report here. And then they usually have a section that calls out all of the expenses that they kind of charge. So these amounts, you would deduct them as commissions and fees on a Schedule C, and they are deductible. They are reported within the gross amount of the 1099-K, so you would deduct them. All right. And this is just an example kind of where things would go. This is just the Schedule C for 2020. You know, you would report the totals from your 1099-K and 1099 NEC, or basically the sum of these two amounts as an example. Whoops. Oh, there we go. You would report them on line one as gross receipts or sales on the Schedule C, and then any fees that are on this section, you could put them on this commissions and fees line. The mileage, you would fill out with the page that I don't have here on page 2 to put business mileage, and then the expense would flow through to line 9 for car and truck expenses. This is just an example of a 1099-K, although it's outdated, it's from 2014, but they haven't changed it. And then here's the new version of the 1099 NEC that replaced the 1099 miscellaneous for non-employee compensation. All right, that's all I have on rideshare. And again, if you have any questions about anything at any point about what I'm talking about, please send your questions on the chat and I'll do my best to answer. All right. Whoops. So now for some 2020 updates. So 2020 has been an interesting year on many fronts, but it's also been interesting in terms of tax law that has passed. There's been at least 3 or 4 laws that have passed that have some components that would affect tax returns and tax law in some aspect. So I wanted to cover here very, very briefly, but we will cover it more on the tax law update section on the 12th. So one of the big things that happened this year is this recovery rebate credit, or as people most commonly say, my $1,200 check. So everybody that was a U.S. citizen or a resident alien that had a green card, they got this economic impact payment of $1,200 or $1,200 or $2,400, depending if they were single or they filed marriage filing jointly, and they were not a dependent and all of this other stuff. So most people got their checks, and at one point it was no longer checks. I think it was like debit cards or something like that. So most people already got it. The way this credit worked, this was really just an advance payment of a credit that will show up on the 2020 tax return. So that means that if anybody did not receive the credit that they were expecting to receive, or they think they should get more than what they got because they have a new child and they didn't know about, and it was not on the tax return that was available to the IRS, there will be a new line on the 2020 tax return on the 1040 that will have a line to put any additional credit that people should receive. I think what the IRS is suggesting is for people to bring the IRS notice that they sent out with how much the payment was. So if people think they should be eligible for more of this credit, they should bring that notice so we can accurately determine how much people should get. There was this relief related to withdrawals on 401ks or 403bs or IRAs, where if you withdrew money because of the virus impact to you, and you're under the age of 59 and a half, they will not charge this 10% additional tax. So in order to do that, there is this form called an 8915E, which is a new form for this year, where we determine how much people actually have to include in income and how much of the early penalty they will be excluded from. And then there's all these rules as to how you qualify for this. I won't go through them now, but just a high level, you either have to be diagnosed or be married to somebody that was diagnosed, or have a dependent that was diagnosed, or you have severe financial consequences, you were furloughed or laid off, you had your work hours reduced, you couldn't work. There's a lot of ways that you can qualify, but I'll cover this more when we do the tax law updates. This is just to point out this is what is there, and I think you have to have advanced certification to deal with this. As the recovery rebate credit, you can either be basic, you have either basic or advanced certification, but for this related to this relief on early distribution, all that, you have to have advanced certification. The other one that was also created was this credit for sick leave for self-employed individuals. They made self-employed individuals also eligible for this credit, and they have to file this form called 7202, which is a new form as well that calculates the credit. There's a huge bunch of little there's a lot of specific items on how you get these credits, and I didn't include them here, but we'll talk about them more later. But this is just so you know there is this credit out there, and there might be claiming it. Same thing, this one, you also have to have advanced certification in order to deal with it. All right. Now, changing topics again. Capital gain or losses. Is this a question? All right, so this is just some concepts, related to capital gains or losses and to stocks and anything else, but basically your cost basis is So your cost basis is essentially how much you paid for either the stock, or it might be a house, or anything that would generate a capital gain. Is either how much you pay, is essentially what you paid for it, or if you have at any point suffered any modifications to that basis, either because you spent more money, especially if it's, for example, a house, and let's say you replace the roof, then you can tack on the cost of the roof to that. But just in general, just for the simplicity of it, let's just say it's just what you paid for it. Holding period is how the time of period between you buying it and disposing of it. Sales price is literally whatever you got paid for when you sold it. A wash sale is when you buy stocks. Let's say I bought General Electric stock, and I sold it for a loss within a short period, and then just to trigger that loss, and then immediately within a couple of days I buy the same stock again, that will generate a wash sale where the IRS will not allow you to take that loss, because the idea is that, well, you just try to generate the loss. You didn't really divest of that ownership. In a capital loss carryover, as you know, you can only deduct up to $3,000 in capital losses every year. So anything above that, you carry forward for the rest of your life, up until whatever that amount is used. And you can only do $3,000 each year. All right. So this is an example of a 1099-B. This one is a little bit old. This came from one of mine from a couple of years ago. But basically, in your brokerage, taxpayers will get a brokerage statement. And in the brokerage statement, it will be all consolidated. It will have the interest, the dividends, but it will also report the sales of stock. And so at some point, there will be a 1099-B, or in a format of what should be a 1099-B. And it will say, okay, was it a short-term gain or loss? Was it a long-term gain or loss? And it will tell you where it should kind of go. So if the cost basis was reported to the IRS, you would put it on an 8949 on the first section under A, in their box A, that will say it's short-term and the basis was reported to the IRS. If it was not reported to the IRS, it would go into box B, and if it's not reported in 1099-B and it's not reported to the IRS, then it will be code C if it's a short-term. But basically, the information, it will give you all the information where it will say, okay, what was sold, when was it bought, when was it sold, how much did you get for it, how much did you pay for it, and what's your gain or loss. You will then put this information into the system, and it will generate it. Same thing with the long term. It will tell you where to put it on the 8949. And the system kind of calculates this automatically, but you have to put it whether or not it's reported to the IRS or not. And it just tells you, okay, when it was bought, what was bought, what was the proceeds, how much you paid, what's the gain or loss. And then it will generate. It will flow first to the 8949, which I have an example here. It's also a little old, but it hasn't changed. But basically, the system will generate this form with all the listings of what you input, and it will say whether it was reported to the IRS or not. You know, it will list everything. If there's an adjustment to it, you can also put in a code. This code is for the wash sale. So it will essentially, there was a loss here of $500. The brokers determined it was a wash sale, so you actually get no loss deducted. And then everything that flows into here for the 8949 then flows into Schedule D, and it will put it on each line where it says 8949 box A, box B, box C, and then the other section with the long-term capital gain or loss will have same thing, but box D, E, or F. All right. And that brings us to a polling question. Oh, I don't have here. See. Oh, I don't have it here. Okay, I don't have it here to launch. But I'll just go through this one instead of doing it as a question. But so the scenario says, well, Andy sold the following stocks this year. So he sold these 4 ones. So which of these stocks, which of these gain or losses are considered long-term? Which ones are short-term? Well, for the IRS, short-term is a holding period of a year. Long-term is of a year or more. Sorry, short-term is a year or less. Long-term is a year or more. And long-term capital gains have preferential rates. Short-term capital gains are taxed at ordinary rates. So in this case, the first one would be considered long-term because it was bought on August 21st, 2019, and it was sold on August 24th, 2020. That is a year and 3 days, so it would be considered long-term. The second one was bought in 2007 and sold in 2020, so that's long-term, that's 13 years. The second one, oh, actually, they're all long-term. Oh, these are actually all long-term. They're all over a year of holding periods. The only one that could be a little tricky is this first one, but these are all long-term. What is the short-term gain or loss? Well, none of these are short-term, so that would be 0. What is the total long-term capital gain or loss? Whatever the difference is here. Let me do the math real quick. 67, 4. So the long-term capital gain is at 131. It's all of this minus this, this minus this, this minus this, this minus this. So when you do this math, it comes down to $131. Then let's suppose there was a $281 loss carryover from the prior year, how much gain or loss do you report on the return? You would basically offset them. So if you have $131 of gain, you can subtract the $281 of a loss. So you actually would report $150 worth of a loss, and the carryover would go away. All right. Okay. These now are related to home selling. Whoops. To home selling. But it's kind of the same concept. What is your basis? It's basically what you spent to buy the house. Adjusted basis is basically the amount you paid for the house and increase in the amount by whatever additions or improvements you made to the house during the period you owned it. And of course, you know, it has to have a useful life of more than a year. For selling price is basically what you sold the house for, and then what you actually made in the sale is basically your selling price minus anything you paid to sell the house, so any commissions, advertising, legal fees, and anything, you know, anything related to the sale. Taxpayers can exclude any gains from the sale of a house if it was their primary home, up to $250,000 if they're filing single or any other filing status, or $500,000 if they're married filing jointly. But there's this 5-year period, test period, where from the date of the sale, the taxpayers must have owned the home for at least 2 years and must have lived in the home as their primary home for 2 years. And during that 2-year period, they could have not have claimed another exclusion from gain on another house. And this is how you report it on the tax return. You have to report the gain when the amount is greater than the exclusion. So let's say the amount was $300,000 of gain. Well, and if the person is single, well, you can only exclude $250,000, so you still have to pay gain. You have to pay tax on that $50,000 of gain. And you also have to report it when the home is not the taxpayer's main home, like a vacation home somewhere. You would have to report gain on that. Sometimes people receive this 1099-S that is what basically reports the home sale. Sometimes people get it. Most times they do not. But if they do get this form, well, then they have to report it on the 8949 and Schedule D, exactly like if it was a sale of stock or anything else. And here is just showing kind of what happens in that situation. As an example of an 8949. And as you can see, there's this adjustment code, code B, which is that exclusion. If it was your primary home where it excluded $500,000, this example was assuming that, the screenshot was assuming that the person was married filing joint and could exclude $500,000. All right. So I have another polling question. So John and Jane sold their primary home and a vacation home in the same year. The primary home sold for $580,000, and their vacation home sold for $215,000. Assume there are no costs in this transaction. So assume the basis in these houses are 0. So how much capital gain do they have to report on their tax return? And let me launch the polling question. Oh, and for the purpose of this exercise, assume they are married filing joint. All right. 30 more seconds or so for everybody to get their answers in. All right. So the correct answer would be C, $295,000. So if they file married filing joint, they are eligible to receive the $500,000 exclusion when they sell their primary home. So they sold their primary home for $580,000. So assuming no cost, they get the $500,000 exclusion. So they would only have to report $80,000 of gain from their sale of their main home. They sold their vacation home for $215,000. Well, there's no exclusion for that. So you have to, when you add all of this up, you have $80,000 from the main home, $215,000 from the vacation home. So in total, you have $295,000 of capital gain to report. All right, let's see. All right, that's all on capital gains. So now I just want to talk very briefly about the Schedule K-1. Sometimes people have them, not very common on the VITA program, but sometimes people have it. If you buy, for example, stock in a publicly traded partnership, you might get a K-1. So sometimes you might see them. So this is what the 2020 K-1 looks like if it's from a partnership. So it has all of these little boxes. It's within scope for a couple of them. These can get very complex, but if it's very simplistic in that they have reported interest income and dividends and capital gains, then usually we can do them. But if they start going into this, guaranteed payments in foreign transactions and royalties we can do. But if it deals with other stuff in here, it might be complicated. So within scope, so these K-1s basically are given to taxpayers if they are partners in a partnership, an S corporation. Sometimes people might also get a K-1 from a state or trust if they have them. And again, it's very limited for us, so we can deal with it if there's interest income, and that's where it would go, any dividend income, capital gains, and we can also deal with royalty income only if there's just income and no associated expenses. So it's very limited. If it goes into this ordinary business income and rental real estate income, then we cannot deal with it. If you get a K-1 from one of the taxpayers and you're unsure, just reach out to one of the site coordinators to get some help into whether or not you should do it before you start it. All right, foreign tax credit. It's also very limited in scope for VITA. So the only point I really wanted to make with the foreign tax credit is, this is basically a credit if you pay taxes to any foreign country for any foreign source income, you basically, if you pay tax somewhere else and you are reporting the income in the U.S. as well, well, you get a credit for that amount of tax you already paid. If that foreign tax paid is reported on a 1099 INT or a 1099 DIV for dividends, you can report it on the 1040, or if not, then you might have to file this 1116. And we usually try to avoid filling out 1116s. Mostly what we would say is within scope and we can do is what's the report on 1099 INT or a 1099 dividend, so we can do it on a 1040. So here's an example. This came from one of my old brokerage statements. And on the 1099 DIV that I have here, I have dividends. And then there's this line that says $2.28 of foreign tax paid. Basically, this amount, because it's below, I think it's $300. I think it's $300 if you're single, and it's $600 if you're married filing joint. You can just put it on the 1040. And this is mostly what I would say is within scope for us to do. I would not suggest anybody start filling out 1116s. It's also very rare, but it might happen from time to time. And this is literally just as a result of owning stocks that are in a foreign country. So, you know, the dividend when it's issued, they take out any taxes that have to be paid overseas, and that you can't deduct. So that's as much as I want to cover here. For this qualified business income deduction, there's a lot here. But basically, the simplified version of this, I don't want to go into detail because this has been around for a couple of years, is basically if you're self-employed and you generate income up to a certain amount, you basically get this qualified business income deduction equal to 20% of whatever the income is on the Schedule C. Or it might also be a result of it might be a result also if you're a partner in a partnership, you might also get a deduction from the income generated there, but although that's a little bit more out of scope. There's also, you can also get a qualified business income deduction if you receive REIT dividends or you have any publicly traded partnership income. There's this whole formula, there's this whole section. I'm not going to cover it. Most of this is complex, but within the VITA scope, we don't hit the income limitations on the qualified business income. It's like $160,000 to even hit it. Essentially, what it does, and the system I think calculates this automatically. It just generates a 20% deduction for any income that is basically it's for self-employed. If you do a Schedule C, it generates this deduction. If it's a qualified trader business, which for the most part, I think we have no issue in qualifying for that for the taxpayers we serve, but also that deduction might also come from any REIT dividends, publicly traded partnership income, or anything, anything basically that is a flow-through entity that doesn't pay tax that the ultimate owner has to pay tax on. So that's as much as I want to cover there. And that was actually my last slide. Wow, this went fast. If you guys have any questions, this is the time to ask about anything that I covered.
think you have a question there, Bruno.
Oh. Can you go over QBI? Yes, I can. Anything in specific?
Hi, I just kind of missed that whole section. So if you can just do high level of pretty much the two topics, that would be great.
Mm-hmm. So I skipped this section for the most part because this gets a little complex. But for the most part,
Yes. Can you please stay in the slide where like it says what it is? I just want to read it.
sure.
Yep. Thanks.
Yep. So for the most part, this qualified business income is basically any portion of income, gain, or deductions or losses that are generated. And of course, if it's a loss, you can't take this deduction. But if it's a gain and it's connected to this trade or business, which if you're self-employed, for the most part, you're considered to have a business, then you're eligible for this deduction. Here it says it does not include this qualified REIT dividends or this publicly traded partnership income, but because it doesn't go into this qualified business in this section, but it is eligible for this deduction. But any guaranteed payments which are completely out of scope would not be covered under the QBI, but it's also completely out of scope for VITA, and then certain investments as well.
Okay. Got it. Thanks.
This gets very complex very fast. It was one of those sections when this came out in 2017, everybody was scratching their heads as to what this was. So my very simplified approach to this, as it, in respect to VITA, would be if you have a taxpayer that is self-employed, files a Schedule C, and has income, because our threshold, I think, is Eddie? What's our threshold this year?
Because of the income tax credit for the third family that has 3, it's 56 something. So we decided our threshold is going to be 57,000 this year.
57. Okay. So all right, thanks, Eddie. So because our threshold is $57,000, this qualified business income deduction really doesn't start phasing out until you get to $160,000 of income. So most of the people, all of our people should not ever be phased out about this. So essentially, if you file a Schedule C, you're self-employed, you're determined to basically have a business for yourself, you generate income from that activity, then you get this deduction that is basically 20% of whatever that income is.
Oh, okay.
And all that does is basically it reduces your taxable income, essentially.
Oh, that makes a lot of sense. Thanks.
Mm-hmm. That's my very, very simplified approach to that one. All right. Any other questions?
So, just to clarify, for mileage addition, if you're going from, for instance, if you're going from your house to the, you know, to the first client, is that
Yeah,
commuting or business?
that would be considered commuting because you're leaving your house to go to your client. So
But if you,
that would be considered actual commuting.
but if you're going from another job, which is not related to your business, to your
Mhm.
business related job, that is business mileage?
Yes,
Hmm. Is okay.
because even though it's two separate activities, you're still engaging in some type of work activity.
Okay. Yeah.
That's why they consider it business mileage. But if you're going from your home to a first location, then it's not, because then
Yep.
it's just considered you're just commuting.
Got it.
Any other questions at the moment? Once again, no more questions?
If you have no questions right now, but then as you review this, if you think of anything, please feel free to reach out to Eddie, and we can, we will answer after the session if you have any questions, or you want to cover anything additional in more detail.
Alrighty. Okay.
I have a question.
All right, John, go right ahead.
This has to do with the material, because you said when you review this, are these slides available to us? Is that what you're suggesting?
The decision will come from Bruno because this is actually his material. Bruno, do you want to make available for only people who came to this class today?
Yeah, similar to what we've done in last year's, I will ask
Yeah,
Eddie to
okay.
share slides with everybody that attended the session. So yeah, in this recording, the recording of the session will also be made available. But yeah, I will ask Eddie to share these slides.
Okay. I believe for those that I came to the basic class, do you receive the slides, John?
If you sent them, I got them. I just.
So everybody that's here today will send, because I have the email on the system, on the sign-on system, the Zoom system. So I will forward the slides to you guys today. And this class will be available on YouTube, so later on you can take a look at it. Yep.
Yes, I did receive the basic slides, Eddie.
Okay, good. And I saw that several of you already watched the YouTube session we did it last time. So yeah.
Yep, thanks.
Yep. All right, guys. Any more questions for Bruno or anything? Or I'll go some housekeeping and some information with the program.
Thank you, Bruno. Appreciate it.
Sure.
Thank you now.
Thank you, everyone.
Okay, thank you.
Thank you.
All right, guys. So I just want to share some information with everybody before we get out, before we be done for today. So Bruno, I'm gonna take over the screen here. Thank you once again, Bruno. Thank you for your time, man. Appreciate it. Yep.
Yeah, of course. It's always fun to do these sessions. It's usually more fun when we do it in person, but at least we have technology and we can see each other, so it's so good. So
For
it's
the
always a
update,
pleasure.
do you want to do the 12? That's how you want to do the 12 for the updates?
Yes, I will be back for the tax update.
Okay, so that'll be the 12, and I'll make sure it's in the system. I'll change that, and I'll do the state updates on the 19th. Okay. So real quick, guys.
Oh wait, no, wait, no, sorry, it's not the 12th, it's the 19th. Sorry, I
The
think I got that
19th?
wrong.
Okay. There's no
It's the
problem.
19th.
I was going to change the date, so there's no problem.
Yeah, no, no, the tax updates will be the 19th. Sorry, I have it wrong. Yeah, I don't know why I was saying the 12th.
Okay, no problem. So once again, everybody, those, I know if you guys were here last time, that we talk about it, how the program is going to go. So once again, the virtual program, several of you guys going to be meeting the client through when we upload the documents to the system, okay? This tax layer, this software that we have this year, it's actually one of the programs that we receive from the IRS. You guys will, all the information, upload information is gonna be into tax layer. I think if one of you guys can mute yourselves, because there's some background noise. Can I mute you? Okay, I got it. Okay, all right. So once again, let me see. Once again, information here. Remember, our this tax layer, this model that we have from the IRS, we allowed to download and upload any information into the system. After 15 days, the system itself will delete it, so you don't have to worry about it. Secondly, you guys are getting emails, a email system from Montgomery County, because we would like a preferred method. You guys can use the emails as a preferred method if you need to talk to the client. All right. We trying to decide with the DocuSign to finalize everything on the PDF file. But once again, the virtual program is the appointment's going to be from Monday to Friday, from 10 a.m. to sometimes to 6 a.m. every 30 minutes. About 3 or 4 clients will do per hour, or every 3. My apologies, 3 or 4 clients we do every 30 minutes, and we depends. The good thing about it, since this is going to be online, once again, you know, if you know you're going to come in on Tuesday, you can come in Tuesday, whatever's the time. You don't have to have a certain time like you had before, because the process takes a little longer now. All right. So the main thing is when we do the virtual tax preparation program, we do a telephone interview. The intake person is going to take care, make sure all the documents are signed, all the documents are received. They receive documents from the taxpayer. They'll either do a meeting, Zoom verification to verify the information, or phone. Then they're gonna upload all the information to you. That means it's gonna, when you log into TaxLayer, you're already gonna have assigned people under your name, and you know, prepare some information already is gonna be in the system because they were here last year, or on TaxLayer, the worldwide program. Okay. Once you complete the return, you're gonna assign to a quality review. The quality review is the person is gonna either 2 things. There's some quality review that's just gonna double check the information and give it to us, or which that's why we have a stops right here. Or there's a quality review that actually wants to do a quality review one with the client. It really depends on you guys. Either use Zoom or the phone information for the review. Afterwards, we gonna get the signed forms 8879 and EL 101. Once again, since our program was the few programs that actually returned doing when everybody was shut down, we have received, we can also do a reading material, meaning somebody can just write back and say, I give authorization for so-and-so to e-file your state and federal, and they send it back to us. We just keep it in the file and we can e-file for them, okay? Once everything is transmitted e-file, everything really, even doing everything, even when everything was shut down, we still received the accepted, or if it was rejected within an hour. So everything was still going on fine. If it's accepted, we have we actually I have set up a little email, and I'll save it in everybody's computer or everybody's email, that you can just send it. It has the number, the website in case something does go wrong, or the number in case they need to do a payment plan. Okay, it's with the state and the federal part. All right, once again, we're going to talk about, okay, so for the laptops, okay. If you have requested a laptop, your laptop kit will be delivered or you can pick up in the office between December 30th to January 11th, right? The cameras are on the way. I already got the go ahead. Everybody's getting the little headphones, wireless mic. Not wireless mic. Actually, there's a wireless mic or the one that you just connected. The laptops, once again, if those of you that decided to have the laptops, you will have a VPN included to the laptop, meaning as long as you have a wireless connection somewhere, you have the private VPN. Everybody gonna get an email because we want to make sure you guys use the Montgomery County email, and that's gonna start being active from January to the end of April. That email, so it's a safer way for you to contact your person. You know, I don't like you using your own personal email during this situation. Do you have to sign any paperwork? Very little. Since several of you are already being volunteers with us for a year or longer, I already have a lot of information in the system. Okay. Language line. We have been given the go ahead to every one of you guys is gonna receive a language line number and a language line password. The language line be able to be used from January to the end of April, meaning anybody, any language, you need a translator over the phone in the system, you'll be able to use it. You know, it's free of charge because you're under the program. Okay. So that's a wonderful thing we are able to get as well. Right. Another thing that's the process a little longer, guys. It's not the same thing that somebody comes in the office within an hour, you know, they meet the prepared, they meet the quality review. If you have any questions, can talk to somebody else, so they can, you know, we can get the referral. But within an hour, that's no longer happening because there's people that once we do their cases, they have everything prepared, but once we start reading the intake form, we can see there's a lot of things missing, right? Some of our clients are already in the system, so I impop our EIN database into the system. So I try to get as many business as possible I could get for the EIN database in Montgomery County, so it'll be a little faster for the W-2s or, you know, all the information you enter. But still, for a client that did a good process, it might be about 2 or 3 or 4 days at the max. A client that will take so long can be 2, 5, or 6 days. Okay, remember, it's going to be a long process. But the good thing, this is online, so that means you can log in and work on the case. Maybe just want to do, you know, can be Tuesday morning, Tuesday night. Maybe just want to do in the weekends, you know, just that's when you just want to volunteer, or maybe just want to do it on a certain night. But either way, we're flexible with the schedule. I'll be contacting each one of you just so I can know which dates each one of you will be able to are gonna log in online. And so some of you might want to do a little more. But once again, the good thing about it, we're flexible. And the main work for us is going to be the intake. That's one of the things we realized when we were doing this back in June. If you do a really good intake, the process is going to be very seamless and easy. If somebody did a horrible intake, it's a go back and forth. Okay. Any questions about it? Anything? If you already request a laptop, already have it, your name's already, you already have a laptop reserved for you. If you have not, just send me an email and I'll make sure a laptop will be reserved for you. Okay.
Yeah, I have a question, Eddie.
Okay.
I did request for a laptop, but I didn't get any feedback.
If you send me an email, right?
Yeah, I did.
Uh-huh. Your
So,
name is, yeah. If you send me an email, I already have you in the database. Yeah.
okay, I got it. So I don't have to worry about your
You
feedback.
don't have to worry about it. The main thing I'm gonna send you is just do you want me to home deliver or do you want to come to the office? Yeah.
Okay, thank you.
So they actually gave us a real car now for our department. So I'll probably do some home delivery. There is a few questions here. Yes. So Joy, the scan documents is for our program. You got to double check with your, it was doing back on March and May, RS pick up some VITA programs nationwide, and we were the few ones around the East Coast that were pick up for. So you got to double check. It's very few programs have that. We won the very few nationwide. Same thing with the language line. We're very few nationwide that were chosen to do a language line. Not every VITA program has it too. Gloria, you were asking, would there be dedicated QR people? Yes, we will go over. Also, I'm gonna go over. Some of you guys just want to be QR. There will be some only dedicated QR people if you just want to be a QR. Or if you want to be a preparing QR, that's fine as well. But if you just want to be a QR dedicated person, should be no problem whatsoever. Any other questions at the moment? All right, no problem. Okay. So there's more questions. Please do. Okay. Yeah, and all the other sessions we're gonna go over little by little. So once we have the sessions about this, you guys already have in your mind. It's like, okay, this is how it works. Okay. Once again, LinkedIn Learn is open. So if some of you guys already have started, I've seen it. So if you want to start it, go right ahead. All right. And don't forget the password for the practice lab, because all your answers is going to be in the practice lab when you finish everything. It's on Train Pro Web. Password for the practice lab is always Train Pro Web. All right. Any questions or anything at this moment? No. Okay. We will. No questions. Okay. Wait. I know everybody. It's Saturday. People want. Oh, there's more questions here. Yes, everybody that's here right now. Bruno has allowed me to email, so I'm gonna email you guys for. Okay, so everybody who's here, you're gonna receive the presentation for today, and I'll also, as I did it for the basic, this is also gonna be it's gonna be online. I decided to put on YouTube, the online platform, because it's easier. I was thinking of putting our web page, but not many people know where they look at our web page, but the online platform, the YouTube, it's everybody can see it. If you can send to a friend or somebody else. Okay. All right. Any more questions for today? No. All right. So once again, any more questions? All right. So once again, I want to remind everybody. Let me go. All right. So our upcoming, we have our next class is going to be Tuesday, December 8th. Ms. Johnson is going to teach that. I'll just be the co-host. She's going to go more into detail about the intake and the interview about our program. Okay. Thursday, December 10th, I'll definitely go into more detail. Bruno talk a little about it. I talk a little about the schedule, seeing the changes they're going to have it. Saturday, December 12th is going to be our state training. Okay. And Saturday, December 19th, Bruno will be back with us. And then we have the text layer refresher courses. For the text layer refresher courses, I know some of those sessions, there is the day and the evening sessions. Each session is different, okay? And we're definitely gonna be using scenarios like today that, so if that's definitely gonna come up, all right? All right. So if that'll be all for today, everybody, I think that'll be all for our training. Once again, I want to thank Bruno. Bruno's still here with us?
I am here.
All right. I want to thank you very much, man. Thank you very much for your time. I appreciate it. And for your dedication for the program, as always, man. Thank you very much for your time. Yeah.
Yes, of course. Thanks all for attending. Thanks for listening to me. Hopefully you learned a lot. And again, Eddie will share the slides. I just sent him a version that has the answers to the polling questions to help out. But again, if you have any questions about anything we discussed today, reach out to Eddie, because I'm not officially with Montgomery County. And if there's anything, Eddie will pass on to me and we can do our best to answer.
Somebody just emailed me about how many sessions. I believe we're gonna have 6 text layer sessions. Okay, I'll be teaching some, and some other individuals on the group's gonna be teaching those as well. Okay. Once again, it's one of the things we did. Like when me and Bruno used to work together several years ago, we realized the more sessions we do in text layer, and we realized we pick up the hardest ones. So when you guys see it, or things that we see a lot in Montgomery County, it's very easy. That's one of the things our program is very successful, because when you see the the study session, when you see real life, like, I know what it is. I already did it, and you know, I'm good with it. Yep. Okay. So once again, guys, take care. Enjoy your Saturday. I'll be off this week. I'll be back next week. But if you need any, if you have any questions, anything, just email me. I'll be available by email as well. Okay. All right. Once again, Bruno, thank you. Take care. Everybody else, enjoy your Saturday. And take care as well.
Okay, bye-bye. Thank you very much.